Most of us invest in dividend stocks, so famous. People invest in dividend stocks to get some steady cash flow, say steady dividend, passive income, month after month or quarter after quarter. Well, REITs is one such dividend paying asset class. REITs are nothing but real estate investment trust, for those who don't know. REITs are nothing but companies basically that operates or owns or finances different real estate assets out there, like warehouses, shopping complexes, office buildings, apartment complexes, etc. It's basically a real estate proxy, and REITs are obliged to pay dividends on a certain predefined basis as per the agreement. They are not like dividend stock companies which are obliged to pay. They are different. They definitely have to pay the committed dividends to the shareholders. REITs is definitely a great source of income, passive income, but if you identify the right REITs. Now, there are two tailwinds for certain sector of REITs which are going to benefit immensely, and you need to find where the puck is going, which means the future businesses that is going to generate the future cash flow. You need to understand what is booming out there. Well, AI boom is definitely redefining the computing landscape, which is going to impact and give an impetus to certain areas of REITs. And at the same time, we know that Federal Reserve has peaked the interest rate cycle, right? It is going to reverse the course. The interest rates are going to come down in the next foreseeable future, which is also a tailwind for the real estate sector because the cost of funding is coming down. Now, there are multiple tailwinds certainly influencing a sector of REITs called as the data center operations or data center REITs. Now, there are a couple of data center REITs you need to know about before you invest. I'll explain with an example. Now, data centers are going to come everywhere because that's a huge demand and a paradigm shift in the way the high performance computing is happening as a mandate for the AI. And huge amount of, billions are getting deployed in capital. And you need to find the right REITs, which are going to get benefited out of this boom. Let me explain. Equinix, this is the best example out there. Equinix is the largest data center player out there, which is a REIT. It's listed in public markets. In fact, Equinix is one of the largest wealth created in the last 20 years after Monster Beverages. Now, the beauty of these kind of REITs is they can compound the dividend per share. It's not just paying dividend consistently, the same 2% consistently throughout year after year. But the dividend per share compounds at an annual CAGR of compounded annual growth rate of 8 to 10% for these REITs which are operating in data centers. For example, Equinix has compounded dividend per share at a rate of 10% over the last 10 years. Digital Realty, the second or another largest player out there in data center, has also compounded at the rate of 5% dividend per share over the last 5 years. They are also investing big time, as I said, partnering with Blackstone. Now, Equinix, let me explain in this table how Equinix is going to benefit from, by investing in REITs like Equinix. You see that in the table, if you put $100,000, for example, you have a retirement corpus of $100,000. You want to you get a steady passive income. So you bought Equinix shares, say for $100,000. You get almost 111 shares at the current prevailing prices, and Equinix pays close to 2% dividends, which means they almost paid $17 per share in 2023. And if you hold 111 shares, approximately you're going to get around $2,000 as per today's value. But it's not just $2,000 that you will get 10 years down the line. It's compounding at 9%, 10% CAGR, which means you are going to end up getting per year $4,500, just in dividends. You put a math together, year 1 you get 2,000, year 2 you get 2,200, at a 10% CAGR, you add up, you're going to closely get $32,000 out there for your 100,000 investments today. So it is an extra 32,000 return that you're getting out of your invested capital, which is pretty decent because that's a passive source of income. And you're seeing some amount of growth in the passive income as well. So that is the beauty of investing in a real estate investment trust or a REITs that is going to benefit from a growth aspect like an AI boom, right? So I just wanted to bring this aspect of REITs for a real estate, for a passive income. Trust this was helpful. Signing off, Sandeep Anand.